just wanted to start, in fact, where I started with Tim Sloan an hour or so ago, and that is to say that clearly there is more bearishness out there in the stock market. When you talk to your customers and look at all the data you get from all of them, does it match up with that bearishness, or are they still pretty positive?
You know, it doesn't match up in what you're seeing, the underlying activity. But I think you have to back up a little bit and think as we came into 18, there was a view of a synchronized growth in the world and everybody was going to grow. And as you get to the end of 18 and think about 19, the basic prediction for the US economy, our predictions go from 3% growth to 2.7. The world to basically be flat year over year. And so now you're setting up in the discussion about 19, the economies are slowing, but that growth rate for the US would be one of the fastest growth rates for the last decade. So there's sort of a half full, half empty view out there. Now let's drop into what the real consumers are doing. Over the holiday weekend, the consumers of Bank of America on their debit and credit cards spent 6% more than they did last year, which was up 7 or 8% from the year before, so you're seeing strong continued growth. In spending cash across the whole franchise, year to date through the end of November, or nearly the end of November, we're up 9% from last year in terms of cash spending on goods and services. Inside that, you're seeing, yes, retail's growing, especially in the Christmas season, but you're also seeing a lot on travel, entertainment, and dining out, which frankly is good for employment in the sense that those things take a lot of people to make happen. And so I think we feel very good about the US economy. The predictions will slow a little bit, but underneath that is a strong growth rate that we feel very strong about. Unemployment, wage growth, all the factors are very strong, including small business enthusiasm that we just put out the other day.